Good morning, everyone. Welcome. It is Monday, July 7th, 2025. Just doing a quick weekly outlook, weekly chart on the Nasdaq. Double click, we've got the ES here. Both of them have taken out their all-time highs. I'm looking for price to run higher. So let's get in on the weekly and look at some of the PD arrays that I think price is going to be keying off from. So the main thing is just here, opening price of this down close candle, drag it out. That is a bullish order block. As you can see, price was consolidating for a while, broke out, created a fair value gap, and it just tapped onto the high, the opening price of this order block to go higher, which is what created this weekly buy side imbalance, which I'm viewing as a breakaway gap. This is one weekly level, weekly order block. So I can imagine if it needs to go lower, then it could go to the midpoint of this wick here, or it could tap the order block again, or it could just tap into here. If it does that, it'd be real nice if we had a S&T divergence with the S&P. S&P's got the same order block like this. And as you can see, we have a low, a high, a lower low, and then we traded above it. The last up close candle would be your bullish breaker. So at the high, right at the high, you got your bullish order block, which is the opening price of this down close, and then this last up close candle would be your bullish breaker. You could also include that wick here, because the logic is that it's the last push up, the last up close candle, then we open and push up again and come lower. But it don't really matter. I'm going to use this, incorporating the wicks of the candle as well. So these are the two important levels on our chart. When we do look at this gap that I pointed out, the only part of this gap that we should be looking at, and in fact I won't use this, I'll use quadrants, is the upper quadrant. So that's our weekly levels that we're looking at. We're keying off of these. We've got a bullish bias. We're going to go to the daily, and on the daily you can see bullish order block that is keying off of a buy side imbalance, makes the order block high probability. So if we just remove everything, you see this down close candle extend out, that's your order block. The down close candles ticked into this buy side imbalance. So small imbalance, tap in, change in the state. So now this opening price down to the midpoint, mean threshold, should support price. Bring back the levels we had in mind. Like I said, it could wick to these levels on the weekly, but I would still like a daily close to respect this order block. So you have a daily candle, could open there, wick up like this, come down all the way here, and it could close there. Like I'm not saying this is what it's going to do. I'm saying that if it were to come to these weekly levels that I pointed out, then I would still like it to respect this order block. In which case, then I'd be looking at the lower half of this wick for the next day. So we'd open here, and I'd look for a reaction from here and target the highs, the close above, turns this into another bullish order block. Because to be honest, the way I'm seeing it, I think if we were to take out previous day's low, we could react real quick. Because previous day's low would tap into this order block again. And it's always good to expand after taking out a daily level. Next chart, next time frame, I'll go down to the 4 hour. So got the daily order block, got previous day's low. Currently trading inside this 4 hour buy side imbalance. Expecting the lower half at the moment. Here's a new day opening gap. It's from here to here. So we're currently expecting the lower half of this 4 hour buy side imbalance. So continuing like that, then yeah, we could see a wick down to previous day's low. You got 6 a.m. candle that needs to open, and then there'll be the 10 a.m. candle. So it could be like a 10 a.m. power 3 scenario. Wick down below previous day's low, come back up, ultimately close higher. That would be, to me, a very, very ideal kind of trade. We could also come down here. I see this as a bit of a balanced price range, and then you've got a breaker here. If we sweep previous day's low, we need to react off of this order block, this breaker, and come higher. 1 hour, there's some liquidity here. So if I start marking out liquidity, we've got all of these lows here, but then this low goes into this imbalance. So I see this as a swing low also. So I'm considering all of these as relatively equal lows. And I just mark that out with £3 symbols. Sell side there. You've got like a low resistance liquidity thing going on here. Phantom trend lines. Something that needs to be taken later on, I think, especially because we're bullish. But I do think some level of this liquidity needs to be taken. You got to think market open, the amount of people that are going to be trying to buy this trend line. You know, the people that bought Tory Trade's course for like $300 or whatever, they're going to be trying to buy that trend line. Their stops are going to be down here. They'll keep trailing their stop to the lows. So this needs to be taken. So some measurement of, so there's this liquidity, previous day's low, already got it marked out. So some measurement of a sweep below that, fine. But it could take all of this as well. Then we go to our bellwether chart, 15-minute. And what I do on the 15-minute is I find midnight open, and it's there. Put that on the chart. So we're currently below midnight open. That's our new day opening gap. Now, real quick, what I like to do is just draw that new day opening gap, close there, open there. We closed here, opened here. This is a new week. But none of this to me matters because we're not going that low. So we've got all this liquidity here on the 15-minute, all this liquidity here. Check the S&P. Same thing, all this generated liquidity. This is getting taken. You know, if I were looking for longs today, I'd need to see all of this taken. I wouldn't need to see this taken because on the Nasdaq, sweat there, and on the S&P, it created smart money divergence. It went up from there to take out buy side, right? To continue its bullish bias, and the weekly's bullish. So if we swept liquidity here, but the S&P was stronger and it couldn't sweep liquidity, that means that stop losses were taken here. Smart money absorbed stop losses here. If we draw from the low, and you can see candle bodies respecting the low like that, right? So stop losses were taken in those wicks. That's where smart money got in. On the S&P, it didn't take those lows because smart money were already accumulating long positions, and they were able to get in. They didn't need to steal, you know, they didn't need to take the stops. They got on these stops. So the way I see it is if smart money got in here, which we can see from the S&T, and from the liquidity sweep, it doesn't ever need to go below there until a market shift, you know, until we're bearish again. So this is what I'll do for the day. 9:30 is going to be here. And when we get here, ideally, I would like to see sweep previous day's low. We're down here. And key off of that end dog and come up. Which, as you can see, would be accumulation, manipulation, distribution, power 3. That's kind of what I'm looking for 10 a.m. That's my outlook. In that scenario, we'd also have is, where's 8:30 here, right? And let's just say 8:30 open is somewhere like here. And then 9:30 manipulate above, relative equal highs, minor buy side, swept, maybe form some sort of SMT around about here. There's a change in the state. Let's say the first presentation is here, and you key off of that. Short position. You stop just there, take it down to previous day's low, leave a runner on, or you wait, right? Because that would be shorting above 8:30 open, right? Which would be good. You've got sell side below and you're shorting above 8:30 open. Or you wait, comes down, now we're below midnight and 8:30. We take the sell side. We don't have to take this liquidity, but say we do, around about in this new day opening gap, you'll get some nice entries. You get a sweep liquidity. Let's say it just sweeps previous day's low and comes off of this, leaves this, right? Let's say S&P takes out the lows, Nasdaq leaves this intact. That would be great. Once we come down, we sweep previous day's low. We react off of the new day opening gap, make a short-term high, come lower, come back up. Now that would be a bullish breaker. Maybe in here is an inversion fair value gap. You know, maybe on the 5-minute you get a change in the state. It's like that. Right? So that is how you do top-down analysis. You know, we started off looking at the weekly. Where's it going? Right? Then we get more information on the daily. How's it going there? Then we get more information on the 4 hour. What's it going to do before it goes there today? Then we get more information on the 1 hour, right? Where's the liquidity? Then we get more information on the 15-minute. Where's all the liquidity? And how could the morning session do what it needs to do, right? But yeah, that's how I do it. That's how I enter trades and everything. And then you can anticipate, you know, where the trades are going to form, like I showed you.